everybody, it's Ed, and the future is now. And the future is the psychology of Tesla Q1 2020. Okay? Also, the psychology of Elon Musk over the conference call, and the psychology of the market in general. Okay, it's not just about the numbers, it's about reading. I wouldn't say reading between the lines, that's too cliche, but it's more about reading what the numbers mean. Okay, what do they mean in the big picture, in the short term, and what do they mean in the long term? So if you're an investor in Tesla, okay, that's important to know both, okay, especially for the long term. Now, remember when Tesla and Elon Musk basically sold the shares, got 2.1 billion or whatever approximately. That purpose, if you read between the lines, okay, was for one reason only, the Cybertruck. Okay? They have to build another factory. In Texas, he pretty much confirmed that on the conference call. Okay? I watched the conference call on Clean Technica, okay? And I always watch them on Clean Technica. And they have all the information. It's to me it's the best place that I find to get the conference call. But anyway, that is the key to the getting the cash. They got the cash to build a factory, to build a Cybertruck. Okay? The only reason the Tesla Gigafactory in Texas, most likely, in my opinion, is wasn't built like a month ago is because of the situation we're in. Not built, sorry, was actually announced. Okay? And that bothers Elon psychologically. That bothers him. That his plans to get that, announced and pushed out has been pushed back. Okay? You could see that, you could hear that in the conference call on that. Okay? So he said basically within 1 month to 3 months, they will be announcing their Gigafactory. Okay? And my bet is closer to a month if Elon has his way. That all hinges on Fremont. Okay? So Fremont being closed is a problem, obviously, for Elon in Tesla. That's the biggest risk right now. And that's what he was furious with, is he shouldn't have to close unless he wants to close. He shouldn't be forced to close. Okay? He feels like he can take all the precautions he wants and make it happen. So he's not happy, and that's where he's seeing the psychology of California politics versus potentially another state. Okay, there's different politics even in different states, so you've got to think about that. Okay, so this is what it means. You can say, oh, 1.8 billion increase in cash. Okay, that's great. Well, what was it for? It was for that one purpose of building that gigafactory and not having to deplete their cash. Okay, and I knew that back when they did it initially. The first thing I said is they're announcing, and they're going to build the new factory. I was thinking Mid America or Australia. Obviously, we know it's Mid America for sure, and not Australia. The next one will probably be Australia. I'm saying that now because after this one, it's going to be Australia. That's just the next in line. Okay, so you've got to think about what they're doing as a company. They're growing rapidly as they can. You saw that from his voice, from what he was saying psychologically. They are going to ramp and grow as fast as they possibly can. Okay, now profitability, this was big too. And I told you guys, in it might have been a video a long time ago, where if they about the S&P and qualifying to get on the S&P. It doesn't make it automatic that you get there. You basically have to be invited on the S&P, which I think Tesla will be invited on the S&P. But anyway, they eked out that profit that we were talking about. Now, I'm not sure that the profit in Q4, okay, I'm sorry, Q2, okay, meaning four in a row. I'm not sure they have to have the four in a row there. Okay, and that's where I'm coming into issues. So if if they have to have four straight, or if they can lose, because I'm getting some conflicting information there. okay, about what I've read about getting on the S&P and what people on YouTube and other people are talking about. So, I mean, they could have a net loss, I think, of 200 to 300 million and still get on the S&P. The problem is with that the Q2 is going to be a massive problem. I can read that almost in his voice that they are probably not going to get that profit, you know. But even with the Model Y ramping up like super fast, okay. But anyway, we'll get into the Model Y. Actually, it's on operations right here. Model Y deliveries began significantly ahead of schedule. Okay, and increased range of the Model S to 3.9. We already know about the increased range, and they reached production of solar roofs in a single week. Okay, those are pretty minor as far as, but the Model Y is not minor. Okay, and the biggest thing from this, okay, from the Model Y, and this is the long-term psychology, okay, in the long-term ramp of the company. They ramped super fast on the Model Y without losing profitability. Okay, a lot of people expected them to lose profitability because of the ramp. It's not a smooth, easy thing, and you spend more money than you want to, and all that. They're getting things down to a science, and this is what you have with the psychology of having a CEO who is an engineer running a company. Most CEOs are not engineers. Okay, my father was an engineer, so I understood the psychology of an engineer. It's very different from a psychology of a business person or a banker or such, okay, or somebody who is in the financial world. They think differently. They think about efficiencies, okay, of things. So they are super efficient as a CEO. They may not know the financials as well and may not be as strong, but that's where you have the CFO. Okay, that's where you have Kirkhorn. Okay, he is a good CFO as far as I'm aware. I mean, I'm a CFO of a small company. That's basically my real position. My position, I mean, as the CEO, yeah, I'm essentially the CEO, but I don't look at myself that way. I look at myself as the CFO. So I understand the difference between those things. The CEO basically manages the administrative position of the company. The CFO manages the numbers for spending purposes. Okay, that's critical here. So you have a guy who's solid as a CFO in Kirkhorn, so hopefully he stays with Tesla for a long time. And then you have Elon Musk, who is an efficiency expert. He is an engineer. He is doing nothing but making things more efficient. And that is, apparent in the Model Y, in the octavalve, and the fact that they're lowering the wiring and the weight of the cars and the costs. All those things reduce down to the bottom line to help your CFO manage the numbers. Okay? And then they sold the shares at a super high valuation. I think it was like 670 or something, or 770. I can't remember exactly. Sorry about that. And they got a good value on those. It wasn't like it was at $200 a share or something. So anyway, moving forward, I know I went a little bit of a rant on that, but that's important to understand the psychological differences between the people running the company. Now we can go into the financial summary a little bit. And this isn't really my forte. Okay, I know what I'm good at. I know what I'm not good at. Okay, and there's tons of people on YouTube that are super effective about this. Okay, I watch Rob Maurer's channel, Tesla Daily, and I basically watched both of his videos last night on his breakdown of the numbers from the financials. Okay, and same with Galley from Hyperchange. So those two guys I follow for this type of data. Okay, but I can still go into it a little bit about the psychology of the long term and basically the future of the company and what people don't read in the numbers. The numbers paint a picture. You just have to see what that picture is. And that's where I'm good at. I'm good at seeing the picture that's driven from the numbers. Most people look at this chart and it's like, oh my God, this is just a bunch of numbers. What does it all mean? Well, look, okay, let's start from the beginning with the automotive revenues for Q1 2020. Okay, 5,132. Well, what does that mean? Okay, is that good? Is it bad? I mean, how would you know, right? Well, compare it to Q1 2019, you can see 3724. So it's up substantially, okay, year over year, 38%. That's the Y over Y. So it's 38% up, okay? Well, is that a lot up or is that not a lot up? I mean, how do you think about that? That's a lot up. And the reason it's a lot up is they didn't add any new products really, okay? The Model Y just started ramping, okay? So that's a big number there. Okay, so that's huge going forward. And mainly, let's look at the psychology behind it. How did that happen? How did that number exist? Okay, that number existed because remember we had massive psychology behind Q3 and Q4. There was so much buzz nationwide and worldwide around Tesla that it didn't slow down their actual demand for the vehicles. It increased a lot of the demand because they got massive free advertising. And you can see that with the Cybertruck. I think honestly Elon showed that he didn't expect to sell that many Cybertrucks right off the bat. I think he probably, wanted to sell a medium ground. And now he's in the whole 700,000 Cybertrucks. They have to get that factory up so they can crank out 1 million Cybertrucks. That's the main issue. He also said about that going to the Cybertruck again is it's not going to be as easy to build. Okay, that was from Tesla, Third Row Tesla, where I watched Elon talk to them about that specifically and the psychology behind it. I don't think everybody was really grasping that. That is not going to be an easy vehicle to build just because they're flat surfaces. Elon reiterated that during that YouTube video, and he basically said that conference, that this is going to be quite difficult to build. I think, and he realizes it as an engineer. He was basically psychologically warning people that this isn't going to be as easy as everybody thinks. I mean, I know I said that everything's flat and you don't have to stamp stuff, but it's a brand new product. Nobody's ever built it. They don't even know how to manufacture that at scale. They basically have to learn how to manufacture that at scale. So the faster they get the test, um, the factory, new factory in Texas or wherever, the better off and the less stress. That's the stress that I kind of felt under Elon's in the conference call. The stress in his voice. Think about that. What is he stressed about? What is he worried about? He's worried about the Fremont factory continuing being shut down because that slows down his ability to snatch on to that gigafactory in Texas, okay? So that's the psychology of it. I'm going from the revenues to the psychology. Okay, now let's go to the regulatory credits because once again, that's how they eked out a profit again. Okay, and that's where the shorts will come in and they'll use their psychology and say, oh, but they only made a profit because, just regulatory credits, That's it. That's the only reason. And technically they're right, right? But it doesn't really matter. That's not like the whole story of Tesla. So you can't just, manipulate that number and say, oh, the 354, that's the only reason because, and this and that. And you're manipulating that data. You're taking a number and you're drawing a narrative that isn't necessarily the whole company. You're just trying to pick at something. That's a huge number. I mean, look at how many credits compared to Q4. That's massive for regulatory credits. I mean, that's like triple, but anyway, from Q3, but 166%. So that's ridiculous. I don't know what rate of scale that's going to increase or decrease to, but that was a pretty massive number. And that's what gave them the eke in profit. So how did they profit? But also let's look at the automotive gross margin. That to me is the psychology. That's the number that you need to be focusing on. That is the number one number, I think, on this entire chart. If I'm looking at this, I look at every number here. That's the number that like blows up in my face and says, holy cow, 25.5. Well, let's look at the last 4 quarters. 20.2, 18.9, 22.8, and 22.5, and then 25.5. What the hell? That's blowing away those other quarters. And Q3 and Q4 were solid quarters. So look at the psychology of that number. That number is a huge difference. The other numbers are basically even to me, more or less. I know it's only 3% differential, but that's a massive issue. First of all, those gross margins, those are critical. Okay, that's critical for any business. So, and the profit, obviously their profit's not going to be as much, but that's because they sold less vehicles in Q1 seasonality. You can't look at 1300 and go, look, oh my God, they went from 1.4 to 1.3. They're going way down in that gross profit, you know? No. That actually, if you look at it correctly, if you look at it and see the picture, that went up. That's a number that physically went down, but it actually went up because you got to take the Q119 number of 751, okay? And you see the 751 over here, automotive gross profit, okay? And 1311. These are huge numbers. Okay, and they're K, which you're multiplying it times, not multiplying, you're adding, some zeros on it. Otherwise, your chart's going to look ridiculous with a ton of zeros. Okay, so anyway, so these are critical. That's the psychology moving forward. And that's what I was talking about before about Tesla is that when they released their 88,000 cars, I was like, wow. I'm like, that solidifies the company. And now you can see that they're more profitable. And they become more and more profitable with an efficiency CEO making them more profitable for the finance guy. Okay, the finance guy is basically just kind of, wrapping his head around the numbers and turning it into the proper picture that it actually is. Okay, anyway, total revenues, it's going to be lower, obviously, because they sold less vehicles. Okay, that doesn't mean anything. Okay, total gross profit. Okay, and that's slightly lower. I'm sorry, it's not lower. It's a lower number. Once again, see, I almost looked at it in a different way. It's slightly lower, but the actual gap gross margin is increased. And take a look at that number, 20.6, higher than all the other 4 quarters. That is massive. The reason the stock reacted is because of these numbers, not because something Elon did or didn't do or said or didn't say or any of that stuff. Okay. The market liked 25.5 and 20.6. These are crushing numbers. Okay. And the regulatory credits, I think the market likes that personally. And then you've got operating expenses. Okay. You have the loss from operations. Okay. And you have the operating margins. Okay. Okay, they lose slight ground. And honestly, that 4.7 to 4.9, let's just read into the line. That could possibly be because of what happened at the end of February and March. Okay, that could have possibly just been something as slight as this giant crisis that we've got going on. So I'm not going to look at those numbers and read a whole lot into it. So that's just, I don't see much. I don't see, it's not glaring out it's not painting a huge picture. I'm not looking at the face of this. Okay. These are underlying things. Okay. The EBITDA, a lot of people look in that and you're seeing no change there as far as percentage wise. Okay. Let's see what we got here. Let's see. And this is the first time I'm honestly looking at this. So I'm looking at this for the first time. Okay. Why? Because I watched everything. I was listening to the call. I was basically kind of taking it in a psychological way. I wasn't just like stuck in the numbers. Okay. You can't just be too lost in the numbers and the charts and the spreadsheets and all that. Okay. But let's get to the EPS because EPS is important. Now, this is where the 0.09 eking out. Like I said, they needed 0.01 to potentially get on the S&P 500. So they eked that out totally, with the non-GAAP at 1.24. So that's pretty solid. Both of those numbers are massively good. You look at them and like, oh my God, that's way lower. This company sucks, right? It went down. You can't think about it like that. The psychology is they made a profit, which is all they needed to do in Q1, which is a tough, profitable quarter for automotive. Okay, So that was massive. That could potentially get them on the S&P 500. Okay? So that is big. I'm not saying that they're going to get on it or invited on it or whatever. I'm just saying that gives them the opportunity, which also moves that stock up. So now the three things that move the stock up after hours 72 or 75 is because of the EPS eking out a profit. It's a surprise profit, basically, because everybody thought they were going to take a loss because they probably should have, but they had all the regulatory credits, so that pushed them into that profit. Okay, so that's what happened. And then their automotive gross margin 25.5 and their GAAP gross margin of 20.6. Those three numbers, the 0.09, the 25.5, and the 20.6, that moved the stock probably $50 a share. Not all the other numbers on this page. Okay, that's my opinion. I could be wrong. Okay, but that's how I look at it. That's how I see the numbers translating into reality of a stock move. In case you didn't know why the stock moved that much. Okay, that's why. Okay, earnings probably being the number one thing. The surprise earnings. Boom, they made a profit. Boom, there it goes up $40 a share. Okay, oh my gosh, gross margins 25.5. This is what the financial analysts look at and they turn into share purchases. Okay, so this is huge. And going forward, that if you look at the long term, for the short term, that's a big bounce. But for the long term, it's even more important. Okay, they didn't struggle in Q1. This was not a struggle, despite them having this, global struggle. The company didn't struggle. That is huge. Okay, now let's move on. So I'm going to skip straight to profitability. And this is funny because, okay, this is so the CFO writing this, okay? Okay, and I'm going to have to read this to you. Okay, our automotive gross margin of 25.5 as well as a total gross margin of 20.6. So, which two numbers did they? This is the first time I've looked at this page, okay? And I didn't need to look at this page to get to these conclusions. They're basically dumbing it down for people who don't understand how to read that chart. So they're saying basically, okay, your gross margin 25.5 and 20.6 both reached the highest levels in 18 months. Those are the numbers. They just showed it right here. This is why I'm skipping over the revenue, skipping over, I don't need to talk about the cash issue, but that is the issue. Oh, let's see. So sequentially, GAAP gross margin was impacted by improved profitability of Giga Shanghai, higher regulatory revenue, the regulatory credits. Did we talk about that? Lower delivery volume, Model Y and solar roof ramp cost, and lower volumes of solar and storage. Okay, so they noted the bottom part, and we didn't really get into the solar issue because he talked about it on the conference call, and it's not that big of a short-term thing. Solar long-term, he basically said, was huge. Solar short-term is solar short-term. Okay, don't rely on it right now for financial benefit to the company. Long-term, solar could be massive. That's the translation. That's the psychological translation from Elon on the conference call. Okay. And then let's see the cash. Okay, we know about the cash, and we talked about the capital raise, 2.3 billion capital raise, offset by negative quarterly cash flow. Okay, let's see. I'm just going through it myself. Like I said, I haven't read it. Let's see, mainly due to investments in Model Y prep in Fremont and Gigafactory Shanghai. Okay, good to go. We don't really need to talk about that any further because, I could talk about this report probably for an hour or two just on the psychology of this and the statements. But anyway, let's go to something negative. Let's forget the operational summary, okay? Let me just look at it and see if I see any numbers that pop out at me. Well, besides the deliveries of 88,000, that's the number I see the most here. Let's see. Yeah, S and Y, that's going to be leaning that. Let's see. I don't see anything here that jumps out on the page to me. Okay, let's see the supercharger connectors. Okay, 17 down. Okay, they added, Yes, less. Okay, they added a little bit less than from Q3 to Q4, Q4 to Q1. A little bit less, which is fine. I'm sorry, 6%. Oh, and it's a 6% increase, but it's less than the transition, is what I'm saying. Okay, if that makes sense. Anyway, so let's skip over that. Da-da-da. Vehicle capacity. Yeah, we've already been over this chart before, and now they got the Brandenburg, Berlin. They got that on the bottom there. Core technology. We don't need to get into any of all this. Okay? What we do need to talk about is the conference call. Okay? And Elon Musk and the rant, that Elon Musk basically went over. Okay? What happened? What was he doing there? Why was he even doing that? Well, he was lobbying. He was lobbying. He knew a lot of people were going to be listening to that conference call. So he was lobbying. Okay, and you guys know what lobbying is, right? You're basically, my son lobbies me all the time for tennis shoes or for some computer game or for anything. But he's always lobbying something. Well, what was Elon lobbying for? He was lobbying to get that factory reopened. He was lobbying Californians, essentially trying to get them to open that factory quicker. Okay? That's what he was doing. That was the psychology behind that. He was mad that the factory shut down, that all of this has affected Tesla. Well, it's affected millions of people, actually billions of people globally. Okay? I think he's a little, this is my disagreement. I think he's a little out of touch. Okay? And now let's look at the psychology behind it. Okay? Why would he be out of touch if that's correct? Why? Because he's an engineer. Okay? My dad was also out of touch as an engineer with human relations skills. Okay, my dad was a colonel in the Air Force, and he would have been a general. The only reason he wasn't a general is because he didn't have the human relations skills, okay, that were developed as an engineer. He didn't have those. He was an engineer, not a human relations expert. Tesla, Elon, is an engineer, not a human relation expert. That's why people pick on his tweets or, the way he does things, the way he says what he says and what he does. People pick on that. Okay, understand who he is. He is an engineer. He is not a great lobbyist. Okay, that's not how I would have lobbied for that. He might have upset people with that. People that have friends or family members that have died are not going to be too happy with those comments, in my opinion. Okay, and this is what I would say I disagree with. I don't disagree with, but you got to look through the lens of he is an engineer. I expect him to say what he said. Okay, that's what an engineer would say. That's what an efficiency expert would say. Okay, that's not what a psychologist would say. That's for sure. Okay, that's not what a doctor would say. I don't think. I hope. So, anyway, I hope this gives you a little bit of psychology into the minds, my mind, Elon Musk's mind, Tesla's mind, the market's minds. Okay? The psychology is what moves the market. Okay? So if you can learn how to read through and look at the numbers and paint a picture and look at the detail of that picture correctly and look to see what jumps out at you, that's important. Anyway, guys, be sure to subscribe and like and share it with whoever you want. I want your feedback on what you guys think. If you think I'm right, you think I'm crazy, you think I'm an insane person, then put it in the comments. This is what I see. I've been studying this kind of the psychology of what's going on, and that's kind of what I get from this. Let me know if you disagree or agree with my philosophy and psychology about this. Thanks a lot, and be safe out there, guys. Take care.